It's no secret that Bitcoin and cryptocurrencies have an extremely volatile past, whipsawing from highs to lows. And November is a particular month that has seen extreme moves in the market, whether that's market cycle tops, all-time highs, new highest daily closes in all-time history, market cycle bottoms, and market collapses. November, we know, is a very tough period in the market for the emotions of a trader. On top of the volatility for Bitcoin, we also have the US stock markets to get through as they have been charging towards higher prices with 7 days up in a row, taking out their 50% levels. Plus, we're still seeing some bank collapses, but I want to uncover the fear porn in the banking collapses for you guys in today's video. So make sure you hit the like and subscribe button. Link in the top of the comments section for our Melbourne meet and greet this Sunday. I'll talk more about that later. You found your home of macro cycle analysis across cryptos, Bitcoin, stock markets, and of course, the real estate cycle. And before we kick it off, quick shout out to our traders at the Investor Accelerator who are crushing the gains here with their crypto trading. So if you want to know more about that, link is in the top of the video description. Subscribe to the email newsletter. These guys, 100%, 60%, 40%, 200%. You guys are doing absolutely amazingly well, and we'll cover more of these gains in the next video. So, want to kick it off with a quick quote here. There's no debate. We will get a global recession. We will get a pretty big pullback in the markets. We're always going to see a recession. Things are always building up towards a recession. But the main thing that differs is the timing of these events. So, potentially, you know what we're talking about here on the channel. We're seeing a big boom. I'm going to go this way into the video, a big boom up and to the right for the markets, real estate, stock markets, Bitcoin, crypto. But this is a precursor to the big thing coming, the big collapse from that point. But let's not worry about that for now. We need to prepare for the move to the upside so we don't miss out on the good times, because the bad times will be here long enough. They'll be here soon enough in those coming years, and they won't be very nice for a lot of people, which is very, very unfortunate. But we want to avoid the fear porn. The fear porn that is taking place today, we see just a little bit of it here with another bank collapsing. I call it fear porn because when you dive into the details, Citizens Bank, so this is based in Sac City, Iowa, they had 66 million in total assets, 59 million in total deposits. Not that great of a deal. Not talking about the people who potentially lost money, but when you read on, it looks like they are getting their money back. I'm talking about the size of the banks here. So list of the largest banks in the US. You can see from the top down, JP Morgan at the top here with nearly 4 trillion in assets, then Bank of America, which are probably all insolvent anyway, but we're just looking at what the data is here. Citigroup at 2.4 trillion, scroll all the way down. You get down to these banks at the bottom here with 18 billion. So when you put it in perspective, it's very, very, very small of a bank to collapse. If that wasn't enough, the list of failed banks for 2023, even though we were told this was the biggest year of the banking collapse, we've had 5. Citizens Bank, Sac City, Iowa, extremely small, just based on the data here. Very, very small. And the rest of these, not even that big in comparison to the largest banks. We had Silicon Valley Bank, I believe, was in the top 20 here. So not even in the top 8, which is the big one that it seems like the US government would protect at all costs if, and maybe when, things actually go down. 2020, list of failed banks, 4. 19, 4. 2018, no banks. So when you look back in history, if you go back decades, a handful of banks collapsing in a year is very, very normal. What isn't normal is when things get out of control and there's hundreds and hundreds of banks. But that's still not even anything in comparison to the 1920s. Of course, things were different at that time when it came to banking licenses. But nonetheless, these are the times where you start to see a lot of banks collapse, not what we saw in 2023. So I wanted to bring that up because of the fear that I think we'll continue to see on the way up based on the wall of worry. When the markets go up, we hear all sorts of fear, trying to keep people out of the markets, telling them to go and buy gold and silver and all these sorts of things that really don't move anywhere in price because they are fearful of the banks. When you go back to the history, you can see 2011, this was back at the collapse after 2008, 2010, and then look at that list, huge, 2009. These lists are huge when you go back to those years there, relatively speaking, for that time. Now move forward to where we currently are today. it's next to nothing. Next to nothing. So it's basically a nothing burger. It goes on the Wall of Worry list on my X account, which you can find a link to that in the video description. So with that in mind, and our Wall of Worry continuing for the US stock markets and of course BTC as well, you can see all the higher lows that have formed. This is March. This is the banking collapse. We had another tiny nothing bank collapse here. Now, if the bank was a lot bigger, it would get more press, but I think this is just part of the Wall of Worry. There's all little things that come out. So the US stock market, again, higher lows. We've got 7 straight days up now. Higher highs, higher lows, breaking past 50%. The next target is 4,400 points, or these tops that formed around the middle of October, coming in around 4,430. So it seems like it is well and truly on the charge to breaking those levels, but time is going to be the key here. Maybe we get a bit of a pullback as the market continues to test these levels. You can see we've got some support coming back at around 4,280 as well to keep an eye on. But over time, it seems like this is the bottom that's forming, as we've covered here on the channel, which is similar to the lows that formed in 2022 from the June low to the September-October low, with the cycle bottom coming in on the 13th of October. Markets moved away from that point. It seems like we are building up towards that again. So you can start to see how the whole picture comes together. The bad news, the higher lows, the bad news, the higher lows. That's a bull market. So it's a similar picture for Bitcoin. The bad news, the higher lows, the bad news, the higher lows, and of course the bears always come at you on the way down. They're hoping and waiting for lower and lower prices, but you can see that they've basically missed out on each of those attempts now, each of those lower prices. When it got to $25,000, $26,000, $20,000 looked better, but it never made it there. And so they miss out, and it brings in max pain to the upside. So the shorts that are waiting to short the market and for the market to go down and collapse get squeezed to the upside. Along with that squeeze are a lot of the spot buyers who were hoping for lower prices because of the fear at those low prices, which then FOMO into the market at higher prices. And then we get this stalling out, trying to decide what the market wants to do next. And so I want to look at what I think is coming next, the information and the analysis that I've thrown up here on the channel. So I think we are going to hit around the 50% level, that mid $42,000 level, which is our 50% for the cycle high, so the all-time high, down to the bear market bottom, straight through the middle there, it's 50%. The halving is coming out here in roughly April, so I think we will test $42,000 before the halving. Whether we close above the major 50% level is yet to be seen. Obviously, we have to see what happens with the market. I can't predict that. I think in terms of the price and the direction and the structure of the market, there is a good chance that we will test $42,000 before we get to that halving period. So with that in mind, and where we currently sit in the market with November here, this is one of those key volatile months that we have seen throughout history for BTC. Last November, if you remember to the day now, this was the day 12 months ago that FTX collapsed. They paused withdrawals from FTX, and that had that big red day down here, basically going from 20,600 all the way down to 17,500. Following day went down again and hit 15,500, and that was essentially the cycle bottom. You had one extra day down here that went below that level for a few dollars for a few minutes, but essentially you could see the base was forming here. So a key pivotal point in the market for Bitcoin occurred in November 2022. Going back again, another 12 months from that point to this exact day, we had the highest daily close in Bitcoin's history. Looking at the Coinbase chart here, 8th of November 2021. So the emotions were completely flipped at that time. Extremely bullish, like the market was going to go to 100,000, all the way down to 12 months later, this market's going to hit $10,000. So you can always see the extremes playing out in the market here. Following day, little reversal, closed under, and then the next day still had a higher price, but a lower close again. So the market's telling you here that it's basically running out of steam and just wanted to roll over at that point. Then comes mid-November, and you start to see that volatility pick up as the market declines at that point. So you can see November around these periods have been extremely volatile periods and basically market turning points. Go back another year, 2020. This was the period where Bitcoin was ramping up to take out the all-time high. That all-time high came later in November, around November 30th, basically even to December 1st. So right on the cusp there of taking out the previous old all-time high. But on the 8th of November, around that same period, you see the market break out with this volatile bar going from 14K, which was at the time taking out and going through that critical level that it did in 2019, which was an extremely euphoric and greedy period going up into that peak of 13,900. This exact time took that level out, paused, and then went again to take out the all-time high. Paused, and then went again. Obviously, the rest is history from that point. So 3 years in a row now, 2022, 2021, 2020 have been extreme years for Bitcoin in the month of November. 2019 saw a pause and a drop to new fresh lows in the move to the downside, and then December turned around and the market started to run up from there. 2018, a bear market year, saw November collapse from that point, and basically, again, almost to the day, a few days later after that point, the 14th, that was when the market really started to break down. And you see we fell into that low. Going back another 12 months, this was where we had a turning point. This was the previous old all-time high for that period. The market ran up to the 8th of November, so it was a previous old all-time high, and then collapsed from that point, going from 7,800 down to 5,500. It doesn't sound like much now, but when you're in the market, those are very extreme emotional times. It then flipped, held above new all-time highs, and then pushed on again just for another month from that point. 2016 saw a pause, and then December took the market to new fresh highs at that stage of the cycle. 2015, that was the big boom into the early stage of November, and then the bust again. So extreme volatility here, going from $500 down to $300. So quite a significant drop in price as well. And we can continue to follow this back throughout history. And you can see that November has been a critical time for the markets. So I bring this up as a point to be aware of in case we do see some volatility and a potential hit towards that next target sooner than the halving. Is it going to happen? Of course, no one has the crystal ball for that. But while we're still in an uptrend, pay particular attention to the volatility that comes around these times in the market. In particular, the November period, as we've seen with all-time highs, bear market lows, bear market breakdowns that we've seen from 2018 as well, and of course in 2022. And then to the flip side, the push to new fresh highs and breakouts of previous accumulation levels. So this isn't trying to say that November has to be an up month or a down month. That doesn't matter. What matters is the volatility, and you have a plan set up. I know the majority of people, they want to know, is it going to go up in November or is it going to go down in November? That's not necessarily the point. And I think if we're stuck on that mindset of trying to know if the market has to go up or has to go down in a month, it's a surefire way to be losing in your trading and investing. Be prepared and understand the periods of extreme volatility versus a boring market, a time when the volatility is quite low. If you can wrap your head around that, it's going to make life so much easier to prepare for, because the volatility is what brings the emotions, the fear, the greed, the FOMO, the FUD, all that sort of stuff into our psyche. And that's the stuff that makes us make extremely bad decisions in the market. It's not the knowing if the market's going to go up or down, because no one knows that. It's the preparation that allows us to put in good decisions or bad decisions in the market. And the volatility is probably one of the biggest keys as well, because of those emotions that come in off the back of the volatility. From here on out, over the course of 2024, 5, 6, I think it is going to get a lot more volatile in all of the markets. The US stock markets, we're just seeing that from these last 7 days, huge bounce to the upside. Of course, the VIX is dropping, the volatility index, because the market's rising. But to be a part of the market as it collapses from 4,400 to 4,100, then all the way back again just a couple of weeks later, is quite challenging on the emotions, especially if you're a trader. The same deal goes for Bitcoin. And of course, if we start to rise from 36,000 to 42,000, it does take out a lot of those psychological levels, the $40,000, the 50% level. And then if we see it retreat again, a pullback, then that can really play havoc on the emotions in these markets. So be prepared for these times. From here on out, we will have some less volatile times, But I think the low volatility times, like we saw at the lows, like we saw over the last 7 months when the market was basically trading between 25 and 32, those extended low volatility periods are probably coming to an end. So be prepared for it. It's a much shorter video for you guys today. Like and subscribe. Link in the top of the comment section. Hopefully we get to see you in Melbourne this weekend at the meet and greet there. Otherwise, subscribe to the email list. We've got some big specials coming up for Black Friday as well. Guys, thanks once again. I'll see you at the next video. Until then, take care and peace out.